we are starting the CMA part 2 leverage topic, right? So
Yes.
what is the leverage? Leverage is basically fixed costs, right? So in your
Yeah.
cost structure, when you say your income statement, there are, right, the leverage is there. Leverage is also risk. Means if there is a fixed cost, this is a risk in the company, right? For example, if somebody is selling, somebody is buying anything for 10 dirham, right,
Yeah.
and
Yeah.
selling for 15 dirham, right? So you can
Mm.
say that 10 dirham they're buying, this is their variable cost. They buy for 10 dirham. Material cost, labor cost, and variable overhead. Basically, we have variable cost, right? So there
Mm.
is fixed cost as well, right?
Yeah.
Fixed costs can comprise of your rent, your insurance, your depreciation, amortization, right?
Mm.
So
Yeah.
there. So
Mm.
the right, when we say about these are fixed costs. So a company will be risky company if they have more fixed cost,
Yeah.
right? For example, in the bad time, in the financial crunch, we saw there were some companies, right? We saw there were some companies.
Mm.
So there were some companies were there, and they have big rent, big insurance, big depreciation, big amortization, so on, right? So when the sales drop, right? Sales drop. When the sales drop, you will say, okay, I should cut my cost. So what cost you can cut? You can cut your variable cost. For example, you will say, I will not buy material, right? You will fire employees, labor. So you will be cutting your cost, but majority cost you can easily cut is your variable cost, right? Whereas you have fixed cost. Fixed cost you have, for example, I told you rent,
Yeah.
right? So, or if you have your own buildings, etc., you have depreciation,
Mm.
right? If you have intangible assets, you will be incurring cost amortization. Intangible asset will have amortization. So
Yeah.
we understand that if a business, right, demand drops, sales drop, right, so you can cut your variable cost, right? But is it possible that you are running your business, okay, right now demand is low, but you cannot dispose of your building, you cannot dispose of your plant, right? Similarly,
Mm.
if you have some brand, right, some patent, right, so you cannot dispose of, because of course in the future you want to continue,
Mm.
right? So that is a fixed cost. So fixed cost is a risk as well. Higher fixed cost, higher risk. You got the point. Higher
Yeah.
fixed cost, higher risk. So we understand leverage, how much you have leverage, how much you have risk, right? So that we
Mm.
understand leverage is basically fixed cost in the cost structure, right? So
Yeah.
leverage, right, if you, I told you already that lower your fixed cost, right, better you will perform, right,
Yes.
and
Yeah.
less risk you will have. So now leverage can be of two type: operating leverage and financial leverage, right? When we say
Yeah.
the operating leverage, so when operating leverage means how much fixed cost is there, right, that is coming from your fixed assets, your property, plant, equipment, right? So that can
Mm.
be, we know mainly we have depreciation, amortization, right?
Mm.
So we can see that operating leverage that comes from your property, plant, equipment, fixed assets, etc., right? And that will be in the form of depreciation, amortization, property taxes, etc., etc., right? This is
Mm.
operating leverage.
Mm.
But when we say about financial leverage means how much finance related, right? When you get finance, right? So that will be interest. Interest is a fixed cost. For example, your sales drop, your interest will
Right.
not, you cannot reduce
Will
the
not.
interest because you
Yes.
have taken in the
Yes.
past your loan, and whatever interest rate, it will be same applicable, right? So
Yes. Yes.
we understand this is our financial leverage, right? If we combine both, that will be our total leverage. Understand my point? So this
Yes.
is our leverage. So when we talk about that, the degree of leverage, total leverage, so that will be pre fixed cost income amount, pre fixed cost income amount. So means income amount means income means net income, net
Yeah.
profit, right? But when
Yeah.
we say prefix cost, so it means
Before interest.
before interest
Uh,
and before
Before the depreciation, property taxes, all this.
amortization. True,
Yeah.
right? So we
Yeah.
understand this is prefix cost and post fixed cost. that is net income, right? So this is, we should understand, this is degree of leverage we have. Now if we want to check, now we are coming to operating leverage. Both operating leverage and financial leverage can be of two types, right? Can be of two
Two
types:
types.
percentage based and total value based, right? Percentage based, right, that we can say, right, for example, if I say, or let me bring to you here Excel. So degree of operating leverage we have, and degree of operating leverage percentage version, right? So we have two types of degree of operating leverage, right? Two types of degree of operating leverage, right? So what, first of all, degree of operating leverage. So if you have 1 year income statement, right, so you can calculate degree of operating leverage single period version. Which one? 1 year, single,
One year.
right? But if you have 2 years income statement, so you can
Hmm.
calculate percentage change, or
Percentage based. Hmm.
right, how much percentage change you can calculate. So you understand, first of all, either degree of operating leverage or degree of financial leverage, right? Both of them
Hmm.
have the same thing, single period and percentage
And the
change,
percentage basis.
right? So if you
Hmm.
have 1 year income statement, you will be applying the single period,
Single
right?
period.
And the what will
Hmm.
be formula? So if
Ah.
you're calculating about operating leverage, so what is the formula? Contribution margin. What do you understand by contribution margin? Sales minus
Sales minus variable costs.
variable cost. In other
Yeah.
words, net income before fixed cost,
Yeah.
right?
Yeah.
So,
Exactly.
right, contribution margin, we call it, right? EBIT, if we say EBIT, right? If I show you here, for example, okay, let's come in the book. Here,
Hmm.
here we have our sales, then we have variable cost, that you get contribution margin, right?
Yeah.
Contribution margin minus fixed cost, that is your operating income.
Hmm.
This is your operating income, right?
Hmm. Hmm.
And if I show you here, see the other income statement that was kind of condensed, and here is little detail. So we can see sales minus cost, this is GP minus selling general expense, this is called operating income,
Hmm.
right?
Hmm.
Operating income means that income generated from your core business,
Core business of this. Yeah.
from your main business, right?
Yes.
Right. Then we have other incomes and expenses. For example, suppose you are a hoteling company, right?
Hmm.
So whatever revenue you get from hotel incomes, this is your operating income. But
Yeah.
if you have some excess money that you
Hmm.
keep in the bank and you earn interest,
Yes.
or you have some additional property that you gave on rent,
Rent.
or you have some investment income, so these
Hmm.
are other incomes. These are
Yes.
other
Other
than
end.
your main core income, right?
Or sometimes we will sell the scrap and we will get some small
True. There
income.
are many types of things, many types of incomes a company can get. So this is basically other income. To generate the other income, we also have some other expenses,
Yeah.
right? We also have some other expenses. So this is, we
Expense.
say, other income and expenses. When we minus, we get EBIT. What we get?
EBIT.
Many businesses, many income statement, you will find EBIT and operating income is the same.
Hmm.
If you don't have other income,
Other income. Yeah.
so you will have other cost, right? So other expense you incur to get to earn the other income, right? So
Yes.
if you don't have other income, other there, so it means your EBIT and operating income will be the same,
It will be same. Yeah.
right? Then after EBIT, we have to minus interest.
Hmm.
This will become EBT
Hmm.
minus income tax. This
Hmm.
will be final your net income, net profit,
Hmm.
right? So you understand that point. So if I want to ask you that is what was our formula? The first formula we had contribution margin, operating leverage. Contribution margin, that is sales minus variable cost,
Yeah.
divided by operating income or earning before interest and tax.
Mm.
If you see the difference between these, contribution margin means sales minus variable cost,
Mm.
right? And EBIT means before interest and tax.
Yeah.
It means after you have incurred other fixed costs, right?
Yes.
Got the
Yes.
point? So contribution
Yeah.
margin is basically this value 20,000,
Mm.
right? Then you have
Mm.
to minus the fixed costs.
Mm.
This will be your operating income,
Yeah.
right? I told you if there is no other income, so operating income and the EBIT is the same.
EBIT will be same.
All
Yes.
right.
Yes.
So we
Yeah.
understand. So mostly they will not give you, they might give you operating income, or they, if they give you other incomes, you can understand that you have to minus this, right, to find out the
Yeah.
EBIT. Anyway,
Yeah.
so we understand here that our formula single period, if you are looking only 1 year, right?
Yeah.
So you will
Mm.
see that contribution margin, that is here 20,000,
Mm.
divided by operating income or EBIT. So EBIT here is 80,000. So 20 divided by 80. So basically we have a 20,000, but then divided by 80,000 loss, it will be 0.25. Our degree of operating leverage will be
Yes.
negative 0.25.
Mm.
When we increase our unit sales, of course, our sales will increase, our variable costs will also increase, because earlier
Mm.
we have 80,000 out of 100,000 variable cost, it means 80%.
Mm.
Same 80% will be here. So we have contribution margin, then we have operating income, and 50,000 is the loss, right? And here degree of operating leverage will be 50,000 divided
Mm.
by 50,000 loss, it will be equal to -1. And if we increase further unit to 500,
Mm.
then it is undefined, that will come 100 divided by 0, undefined, right? After that our degree of operating leverage will be jumping ahead, it will go 3, and then later on like that. So what we are learned from that, that the firm breaks even uh, at sales of 500 unit, as the example of demonstrate, DOL is not meaningful measure when the firm incurs an operating loss. So degree of operating leverage will be feasible more, right, practical more, or important more when it is coming
Mm.
positive, when it's coming positive.
Correct.
So
Mm.
higher the degree of leverage, it means higher risk,
Yes.
means higher
Mm.
risk. So anyway, this is the single period version, this is the single
Single.
period version.
Yes.
If we have been given 2-year data,
Mm.
2-year data, so we have to find out degree of operating leverage considering 2-year data. And what will be formula? Formula, like, remember, I'm telling you one formula that I always say growth formula. What is the growth formula? Current minus last divided by last. What is the formula?
Current
Current
minus last divided by last.
last. If you say regarding growth of sales, so current sales minus last year sales divided by last year sales. If I
Yeah.
say your any expense, so current year expense minus last year expense divided by last year expense, right? This
Mm.
will be formula. So percentage change version, when you are calculating degree of operating leverage, and percentage change version, so you will say current, right? So what is the formula? Basically formula is EBIT divided by sales. What is the formula? Percentage change in
API.
EBIT
Mm.
divided by percentage change in sales, right? So remember this formula, right? When we are using the 2-year data, when we are
Mm.
using the percentage change version, so our formula
Yeah.
will be percentage change in EBIT divided by percentage change in sales. 2 years, right? So if you
Right.
see
Mm.
percentage change in EBIT, how much EBIT we have? Current 150
Mm.
minus 125
125. So not
divided by
25.
125. So if I
Yeah.
calculate that, let's see if I'll
Okay.
calculate here. 150 minus 125 divided by 125.
Mm.
times 100, 20%. How much?
20%.
Right. So we understand that percentage change in EBIT. How much from the last 125 now become 150, right?
Yes.
125 EBIT has become 150. It means we can say 20% growth.
Mm.
20% growth.
Good.
Let's
Yeah.
check now the divided by sales. How much sales we have? 1400 has become 1800. So
Mm.
again, I can apply it that 1800. What will be, how I'll do it? 1800,
1800 minus 1400 divided by 1400.
right, times
Mm.
100. So that's coming 28.57,
Mm.
right? So if you see 20 divided by 28, what is coming now? EBIT is 20% growth.
22.7.
In
Mm.
sales, 28% growth, right?
Mm.
So if
Mm.
you will divide it, so what will come? 20 divided by 28, 20 divided by 28,
Mm.
that was 0.57, right? So that is
Yeah.
coming, right, how much? 0.7,
0.7%.
right? So degree of operating leverage is 0.7, right?
Yeah.
In other words, we can say $1 increase in sales will
Mm.
bring 0.7 EBIT.
Yeah.
You got the point. So
Yes.
$1 sales will bring zero point 0.7 EBIT, right? So this is, we understand. So degree of operating leverage is 0.7. Every 1% change in sales generate 0.7% change in EBIT,
Mm.
right? This is called degree of operating leverage, right? Degree of operating
Yeah.
leverage, right?
Mm.
So this is a degree of operating leverage we have already discussed. That is basically relates to fixed cost in your cost structure, right? Especially property, plant, and equipment related cost that we
Yeah.
discussed. This is depreciation, property taxes, amortization, so on, so on, right? Now, this is what we discuss our degree of operating leverage, right? Now
Mm.
DFL. So remember, degree of operating leverage is also called DOL, right?
Yeah. Yeah.
Short form DOL. Now we are heading for degree of financial leverage. Degree of financial leverage, again two versions: single
Yeah.
period and percentage change.
Percentage.
Single period 1 year,
Mm.
percentage 2 years,
2
right?
years. Yeah.
So if you can see regarding the single period, if
Mm.
when I show you single period, DOL was contribution margin divided by
Contribution.
EBIT, means
Mm.
difference what depreciation amortization taxes, right?
Mm. Mm.
Right. Similarly, now we are coming to the single period, right? DFL now we are coming. So the difference will be of, because financial leverage is interest,
Yes.
financial cost, right? So the
Yeah.
difference will be interest. Am I
Mm.
right? So what is the
Mm.
formula? EBIT means earning before interest and tax.
Mm. Yeah.
Divided by what? Only EBT. Only what?
EB,
So you can understand what the difference coming? Only of interest.
EBIT. Yeah.
Interest,
Interested. That's
right?
all.
So
Mm.
up there before interest, later there after interest,
Mm.
right? So EBT means after interest. So earning
Mm.
before taxes means
Taxes.
earning
Interest already
after interest
considered.
but before tax, right, tax. Anyway, so this is the formula for single period version. And if you want to calculate the here degree of financial leverage, what is EBIT? We have EBIT, how much we have here?
150.
150,
Yeah.
and divided by EBT, how much EBT we have?
EBIT is 135.
So it means 1.11,
Mm.
right? So for the
Mm.
current year, our degree of financial leverage is 1.11,
And one.
right?
Mm.
1.11, right? It means every $1, right? Every company needs $1.11 EBIT to generate $1 of
EBIT.
EBIT. It means, in other words, zero point 0.1 will be spent on interest around, right?
Yeah.
You got the point. Point
Yes. Yes.
0.1 when will be
That
spent,
difference. Yes. Yes. Yes.
right? So you need to earn, right? You need to earn 1.11 EBIT. So
Hmm.
in other words, for example, I am the lender and you have taken loan from my bank. So you know that, right? I have, you always have to look that if I want to give EBT, earning before tax, of $1, so I have to earn how much? 1.11
Hmm.
EBIT. Then 0.11 will be deducted in interest. Then EBT will be coming how much? $1, right? So this is very important. So you should know that how much leverage is there in your business, right? Degree of financial leverage formula: percentage change in net income divided by percentage change in EBIT, right? These formulas you will have to learn, right?
Yeah.
So you have to learn. So right, so percentage change in net income divided by percentage change in EBIT. So how much net income change is that? Current minus, wait a second,
Yeah.
call. Yes, Dharinder. So you
Yeah.
understand? So we have done the degree of leverages, right? Degree of
Yes.
leverages we have understood, right? And degree of operating leverage and degree of financial leverage. So we were looking at 81 minus 69,000
Yeah.
divided by
11.
69,
Yeah.
right? So how much you will get if you will calculate degree of financial leverage by that? So 81 minus 69 divided by 69. What you will get?
70.
17.39. Then
Hmm.
divided by EBIT. So EBIT, how much we have? We have EBIT 150 minus
Nine.
125 divided by 120,
125.
right? So that
Yeah.
we can divide on, and
20%.
that you can see that will come 20%. Now we can divide 17.39 divided by 20%. So how much we'll get? We will be getting 0.8695.
Yeah.
So what it means that, right, every 1% change
Change in
generate
EBIT.
0.87 change in net,
Change in net income.
right? It means that 1% EBIT you will earn,
Hmm.
then out of this you will pay interest, then you will
Yes.
pay
Then.
taxes. So
Hmm.
finally net income will be left, right?
Hmm.
So if EBIT is 1, then net income will be remaining only 0.87,
Hmm.
because the portion will be spent on interest and taxes. Understand my
Yeah.
point?
Yeah.
So, right, in decision making, it's pretty important. It's
Yeah.
pretty important that actually your results, your
Yeah.
company performance is basically sales minus cost minus expenses. You got the point?
Yeah.
This is your business performance. Sales minus cost minus expenses. This is your business performance, right? That is
Yeah.
basically EBIT. That is basically
EBIT.
EBIT. But in the past, we have taken loan that interest we have to bother bear, and then taxes, of course, income will go. So you want to check that how much EBIT I get. If I get EBIT this much, so final residual how much net income I'll have, because the portion difference of portion will be spent on interest and taxes. So this is, we understand leverage, right? So what
Yeah.
is the leverage? Leverage is a fixed cost.
Fixed cost.
Leverage is a fixed, is the, you can say, interest element, right?
Depreciation, amortization.
Amortization, etc. Operating leverage and
Thanks.
financial leverage. So this is what we understand.